In today's video, we'll talk about a crypto giant with 1.7 million users which might be on the brink of collapse. The current market situation, rising oil costs, global chip shortage, supply chain bottlenecks, and rising interest rates are now affecting the crypto and NFT markets as well. For example, Bitcoin's now worth less than 1/3 of what it was at its peak. Now, a crypto giant might be collapsing. Let's dive right in. Firstly, the crypto giant with 1.7 million users is on the brink of collapse. A crypto giant, Celsius Network, might be in big trouble. Most recently, the company has paused all withdrawals from their wallets because of extreme market conditions. They have also not clarified when users will be able to start withdrawing funds again. In a blog post, the company stated that it's pausing all transactions due to the market conditions. And not only that, it'll be pausing swaps and transfers between accounts as well. The company stated, due to extreme market conditions, today we are announcing that Celsius is pausing all withdrawals, swaps, and transfers between accounts. We are taking this action today to put Celsius in a better position to honor, over time, its withdrawal obligations. But first, let's discuss what Celsius does and how it operates. So, how does Celsius operate? Celsius has boasted that it has 1.7 million users. Now, all those users might be at risk of losing all their savings and investments. The Celsius network operates by paying interest on crypto deposits. It also loans them out and sells its tokens. But then in mid-June, it froze all trading activities. The UK-based company has also laid off 150 of its employees. They owe around $80 million to their creditors. This has sparked fear among the crypto community that the company might be on its deathbed. But why is the company in trouble? Well, it might not just be the company's fault. The crypto situation is a little messy right now, as you might have heard. In June, the Bitcoin's price just nosedived to the ground. This prompted a mass sell-off, which then made the situation even worse. All of this started because of the fear of an impending financial crisis. People are expecting it to be worse than in 2008, but at the same time, fears might be exaggerated. Most recently, the price of Brent crude went below $100 a barrel, so inflation might just start to tame. But the damage has already been done. The crypto giant Celsius is finding problems in coughing up enough money to pay back its debts. The problem with Celsius is that they rely mostly on Bitcoin, and Bitcoin has crashed hard. Because of this, they had to stop all withdrawals, which was unprecedented. 3 weeks after that decision, they're still paused. In the last 5 days, the crypto giant was able to scrape a whopping $142.8 million to pay off its debts. However, they still owe another $82 million to Maker, a company that sells stablecoins but is also their creditor. This crash overall has lost the firm $667 million. So what's going to happen now? Well, Alex Mashinsky, the founder and CEO of the Celsius network, tweeted that the company is working non-stop to fix the issues. He even stated that they're focused on the concerns of their clients and that they're thankful to have heard from so many people. He further stated that seeing all of his clients come together shows that the Celsius community is stronger than ever. Mashinsky then stated that this is a difficult time for many and that their clients' support and patience means a lot to them. But since that tweet, it's been 3 days and the issue doesn't seem to be resolved. There are 1.7 million people around the world who are unable to access their investments and savings. The company is also issuing rewards to its users, but then the catch is that the clients can't cash them out either. Now, U.S. regulators in the states of Washington, Texas, Alabama, Kentucky, and New Jersey are investigating whether Celsius's move of freezing people's accounts was even legal or not. A U.S. citizen by the name of Ala Drixna used up all of her life savings to buy up Ethereum and Bitcoin on the platform. She has money worth 6 figures sitting in her account, but she's not even sure if she'll ever see that money again. You know what they say, folks, never put all your eggs in one basket. Had she invested her money in different platforms and different types of investments, she would have had her investments still available to her. Amidst all of this, Celsius has brought on legal counsel to help them restructure the company. According to the business publication Quartz, Celsius has operated like an unregulated bank. They entice their customers with extremely high interest rates for deposits. Then they use their deposits to make loans to other customers. The company had also used Bitcoin as collateral for their loans. This means that once the price of Bitcoin dropped, they had no way of being able to pay back their creditors. The problem with the cryptocurrency market as we speak is that it's running extremely unregulated. It's the wild west of financial systems out there. The broader market has lost close to $2 trillion, yes, trillion with a T, dollars since its peak in November. To put this huge amount into context, Australia's entire GDP was $1.8 trillion in 2021. That's how much wealth people lost globally. But now, some regions are trying to bring crypto into the regulated market to stop this madness. The Celsius network is just a drop in the bucket. There's been so many problems caused by this crypto crash lately, all because of the fear of an impending financial crisis. The regular financial markets themselves haven't reacted with as much volatility as crypto has, and a part of the reason for that could be how they operate. Now, let's discuss some other news related to the crypto crash and the regulators' push to start regulating the market. Okay, so Europe is trying to rope in the crypto market into the regulated financial system to prevent companies like Celsius from doing what they did. Europe has always been the first to think about its consumers. Rather than letting capitalism run rampant, Europe has always introduced regulations to protect the environment and its people. For example, Europe's long battles with Apple. Firstly, they proved Apple was slowing down their phones and making them stop. Secondly, they're trying to get Apple to use the USB-C charging pin to protect the environment and to save their customers some cash, since they're most likely to have these chargers beforehand. Now, there's a new landmark rule in the region that's going to protect all types of investors from falling for scams and frauds. Crypto companies will also have to register with the authorities before being able to serve clients in other countries of the continent. The industry will now have to abide by the same kind of consumer protection laws that all other financial industries abide by. This is to protect their people. But what about the environment? First, let's discuss crypto mining briefly. Crypto mining is extremely energy intensive. For example, it takes about 143,000 kilowatt hours of energy to produce just one Bitcoin. That's the energy consumption for an average US resident for about 13 years. Yes, 60% of the energy now comes from renewables, but 40% of such a high number is still a lot of energy coming from fossil fuels. Also, if this energy wasn't being used, there would be a lot of renewable energy for households, driving down the cost and being sustainable at the same time. So with that out of the way, there's a new rule in Europe that crypto mining firms will have to disclose their energy usage publicly. They'll also have to display their environmental impact online. These regulations come in the wake of the crisis in the industry. For example, the Celsius network that we just mentioned wouldn't have been able to freeze clients' assets in a regulated market. Now let's talk about another casualty of this crashing market, the company Voyager. The crypto broker Voyager Digital has now filed for Chapter 11 bankruptcy. The filing lists assets of between $1 billion and $10 billion. Sounds quite good, but the problem is that their liabilities lie in the same range. The company has said that it has $1.3 billion of currencies on its platform, and they also hold more than $350 million in cash. They suffer huge losses because of the hedge fund Three Arrows Capital. Three Arrows Capital went bankrupt a week before after defaulting on loans from several firms, one of them being Voyager, not to mention that they owed Voyager $650 million. Since the start of 2022, the company lost nearly 98% of its value. They've now claimed that they're still trying to recover their funds from the now-bust company. Lastly, U.S. crypto regulators can't own Bitcoins. As countries and regions are trying to regulate the market, new rules all across the world are showing up. Most recently, in the U.S., a notice has been issued that if an employee owns crypto, they're not allowed to make any policies related to the industry. This is to prevent any conflict of interest. That's a little bit weird, but we can see the thinking behind it. Do you think it's a good idea? Either way, to find out how well this rule will work, stay tuned for more. Well, that's all we have for you guys today. Let us know all your thoughts in the comments section below. Don't forget to like and subscribe if you enjoyed this video. See you guys next time. Bye!